Hi everyone, today let's talk about the CPI data. Of course, we have a lot of charts to get into, a couple of individual stocks and all the major indices, and a couple of indicators. Then I'll finish up by going over my accounts and my progress over the course of the week. If you like trading stocks and options and making money, definitely like and subscribe. Make sure you hit the bell so you don't miss out on any future videos, and hopefully we all make a little bit of money together. Welcome to the Portfolio Bulletin. Let's get started. So going over inflation basically came out how I expected. It was higher than the street's expectation. You can see the consumer price index was up 0.4% and 8.2% from a year ago. Core CPI was 0.6% for the month and 6.6% annually, and wages fell relative to inflation 0.1% monthly or 3% year over year. And the takeaway here is that the Fed could do consecutive 0.75 raises in November and December now. Previously, the expectation was 0.75 in November and then maybe a little bit less in December if we started to see a tapering, but obviously that did not happen. The dollar continues to rally based on this information, and they go over that in a little bit more detail here. You can see CPI rising over time, so we still did peak a little bit here in June, but it's not tapering off as fast as we would have expected, which is going to give the Fed the ability to keep those rates higher for longer, which is something that they've also been saying in their Fed minutes. They say the Fed continues to reiterate they are committed to price stability and fighting inflationary pressures. Of course, that means for us that stocks are going to continue to go down and the dollar is going to continue to go higher, and bonds will also continue to go down as their yields try to compete with inflation. Of course, we got Jim Cramer here, who will tell you to continue to buy everything, and we should be fine in the long term. Moving over to the stock charts, we got SPY here first. Not quite a new low, going back to Friday, September 30th. So basically flat from that time. We did have that big down day on CPI, and then it rebounded all the way back into that range and then retested those lows. So this downtrend is still intact. We did not get the thrust out that I kind of expected or the follow through on this gap. That gap is still here, sitting at the 370 range here on SPX. I will also highlight we are getting some divergence here on RSI. We had a low here on September 30th, basically at the same price we are now, but RSI is a little bit higher here. Price action is flat. Looking at the NASDAQ here, you can see it looks even worse. We are creating lower lows here, but RSI is still diverging slightly, and you can see the MACD here looks pretty oversold, pretty flat on momentum right now, despite making those lower lows on the week. We did break through that 265 range, which is what I've been looking at. If we zoom out here, the next level of real support is probably around 250, which is the lows of that trading range that I was looking at. So we had the 265 here, the lows of that choppy price action we saw in September of 20. And then prior to that run up, we had the 250 range here in July of 20. So that could be another 15 points lower, which does correspond with some of these support levels. There's quite a bit of support here based on these channels, and we are in the lower range of these channels. So if you're looking to go short, I don't know if I would do that until we get a full break of these ranges. Otherwise, we could get a short-term rally to retest some of these resistance levels here in the short term. Moving over to IWM here, this is the strongest of the bunch. We did rise slightly despite the price action, and RSI rose with it. So IWM looking the strongest, and it held that 164 level. So 164 is currently support. It has triple tested that. So we had one here in June, one here in September, and then again in October. At this point, this support looks pretty strong, and I'm definitely looking for a move higher, maybe into the 170s. I do want to go through some of the ratios here. So the NASDAQ to SPX, you can see we've been on that downtrend. SPX has been beating the NASDAQ, but we are at support. It might be time for the NASDAQ to outperform a little bit. We can get a nice rally in this ratio. It might be time to buy the NASDAQ and maybe sell the SPX if you want to trade that ratio. But you can see this ratio is oversold here on RSI. But there is still a little bit of momentum here to the downside, and there is some support that could be tested a little bit lower than we are right now. But we're getting into that range where the NASDAQ starts to look a little bit more attractive versus the SPX or the Russell 2000. Moving over to SPX versus the Russell, you can see we're right at the lows. The Russell has been beating the SPX. The Russell is the strongest index right now, but we are at a little bit of support. We could see a little bit of a rally in the SPX versus the Russell. If this does break down, the Russell is clearly going to be a much stronger trade than the SPX. And traditionally, we are in one of those higher ranges for the SPX versus the Russell. And as I mentioned before, it seems like the Russell is the strongest index right now. As you would expect here, the NASDAQ is falling versus the Russell, but again, kind of at support. might see a little bit of a rally in the NASDAQ versus the Russell. If we do get a nice bounce, it seems like the NASDAQ could be a better buy. We're definitely getting in that oversold territory here on the RSI for the NASDAQ. So keep that in mind. But again, I still think the Russell is quite strong here. Moving over here to CrowdStrike, this is one I've been talking about for a little bit here. I was kind of sad to see it roll over, broke through this resistance. I did not trade this, so I was fortunate here, but the bear trend continues. We're still not at the previous lows, so it's a little bit better shape than the NASDAQ, but definitely looks weak right now, and I wouldn't be buying this until we get some support, maybe in that 130 range, or even a little lower in the 120 range here for CrowdStrike. Moving over to Lululemon, still looks pretty strong, still slight bullish trend, still creating higher lows. As long as we get the bounce here, seems like we're in a nice position to get a rally into that 320 range. There's a little bit of resistance here at 300, but that's a nice little move here from 285, 288 range up to 300. And that's what I do expect to see for Lululemon going forward. Definitely be patient here though. If this does break down, this could certainly go down to 250 pretty quickly. And then if 250 breaks, that was the previous highs here for prior to COVID. And if that breaks down, I'm not exactly sure where we're going. There's some support maybe at 235, but just be patient here. I do think this support will hold. Lulu is still a pretty strong company and potential upside into the 320 range. Moving over here to Boeing. This is a company I don't really talk about very often. It's been on a huge downtrend for a very long time, but we're getting into those COVID lows. Stock is trading at $130 per share after trading up at $450, so definitely very cheap relative to its history. Like I said, COVID lows in that same range, and it looks like we might have found a little bit of a bottom. So we hit all the way down to 113 or so. Got a slight bounce all the way up to 170, back down to 120 or so. Then we created a little bit higher low here, and it seems like this support is going to hold. We get another retest of resistance here. That would put us around 155, 160, which would definitely be some good upside from 133 where we are right now. Moving over to oil here, or XOP, you can see oil is kind of trending sideways at this point. Not making higher highs, not really making lower lows. Be patient here. If you want to buy the lows or sell the highs, that's probably what I would be looking for. This does not look like a trend at this point. You can see it here, momentum is fading. RSI is dancing around that 50 range. Got all of the telltale signs of sideways price action, and I would trade it that way. So sell the highs, sell the calls, sell the puts on the low side. Looks like 112, 110 is the lows, and anything above 165, 170 is going to be pretty overbought, and more realistically, probably that 150 range. Moving over to Camco, this is a uranium mining company. Not a company I talk about a lot, but it's had a pretty big rally with energy. You can see we were all the way down at less than $5 a share. We touched all the way up to 32 at one point, and we're back down to 21, so a lot of volatility here. They did announce they're buying a company here on Friday, which is why you have this big red bar. Currently at some kind of support. Long term, we're kind of in that same range where it's normally valued. You can see all through the 2012s. 2013, 2014, we were in that same range. But it seems like with the rest of energy, uranium is getting a little bit of a bump, fundamentally undervalued. I'll probably address that more in a later video, but definitely keep this on your radar. If this dips down even anywhere close to $15 per share, so another 25% lower than we are right now, or we touch this 144 EMA, should be around 1750. I do think there is some value in this company, and keep it on your watch list going forward. Finishing up with indicators here, I do look at bonds to help keep me in line. We do have junk bonds here, or J&K. We do have some pretty decent divergence. So the RSI was lower than it is right now, but price action is in that same level. So not making new lows, RSI is stronger. This could be pointing to the same divergence that we see in the SPX as well as the NASDAQ, but it's definitely not pointing to new lower lows ahead of any move for equities. This is very different than what we see here for TLT. TLT continues to downtrend pretty strongly. Throughout the week, it made lower lows. So the RSI is slightly stronger now than it was on the 27th of September, and the price action is lower now than it was then. So maybe a little bit of strength. Momentum is definitely fading. You can see we're flat for a couple of days in here. In my opinion, bonds are still oversold from where they were and historically pretty cheap, especially on the treasuries. But bonds are not pointing to new lower lows in equities right now. Let's finish up here with the VIX, as we usually do. We're in that same flat top range, resistance held at that 3450 level. And we do have a little bit of divergence here in the opposite direction. Volatility is at the same range that it was, but RSI is fading here on volatility. And it seems like we could get a break of this lower support level. If we do, that would definitely be good for stocks, and we should expect at least a rally in the short term. And that is what I'm looking for going into the early parts of next week. Looking at my totals here, you can see I'm up just about $50 from last week. I think I was in the $84,640 or so on my total net. So about $50 up. You can see my Roth IRA did pretty well due to the IWM holding up pretty strong. And you can see I did sell puts in IWM once again, collecting a 50-cent credit to buy the stock at 164. I do think that is a good purchase price right now. It's quite a bit below where we are going into the close. So I'm pretty happy with that. I would definitely take those shares at 164. In fact, I might roll this up to 165 depending on the price action that we see on Monday. And the Qs definitely got executed on a couple of puts going into Friday. I didn't think we would dip quite as hard as we did on Friday, especially after the rally we saw on Thursday. So I got a little bit over eager. I got those 300 shares right here that I did already sell calls against, 3 covered calls at $2.24 each, right at the money. You can see a little bit of a loss here already, but I don't really care about that. I do want to get out of these shares as fast as possible, and this is not really a real loss for me. I do want to get executed at 261, and the stock closed at 260.74, and I think it fell a little bit after hours as well, so definitely want to collect these credits as fast as possible, and I want to get executed on these shares as fast as possible, and then I'll be looking to sell puts even lower and continue to average down in order to protect myself and try to reduce the losses as much as possible. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future videos. Comment down below if there's any stocks or charts that you want me to go over. I don't go over every single chart every single episode, so definitely comment down below if you want to see any charts in future videos. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, good luck in your trading and have a great day.